What's up, millennials? Welcome to part 2 of this little Bitcoin series. In the previous video, we talked about why ARK Invest thinks that the Bitcoin network could be a good and interesting financial institution. And in this video, we're going to talk about why they think that Bitcoin as a currency could also be a very interesting investment. So about a week ago, they published their second white paper in which they pretty much explained 5 reasons or why they think that the Bitcoin as a currency could be an interesting investment. So let's just hop into the white paper and see what they have to say. So let's start with reason number 1. The first reason they mention is that the price of Bitcoin has already gone up a lot. They start out with an epic story that is quite well known, that in 2010 there was a guy who bought 2 pizzas for 10,000 Bitcoin, which was, back at that time, was around $25. And if you would calculate that in today's prices, then, well, 10,000 Bitcoin would be around $100 million. So that were pretty expensive pizzas. Let's take a look at figure number 1 over here. Here we can see the price history of Bitcoin in US dollars. And first, let me tell you a little side note, a very important side note actually, because the graph is on a logarithmic scale. What does that mean? Well, if you look at the y-axis over here, the vertical one, you can see that each step is 10 times as much as the step below. So it starts out with 1 cent, it goes to 10 cents, $1, etc. Okay? And this way, the graph looks a little bit prettier than if you would use a normal linear scale, so a so-called linear scale, which would have equal steps on the y-axis. So it would be, for example, 10, 20, 30, 40, 50, etc., etc. Then if we take a look at figure number 2 down here, which is also quite interesting, you can see that since the beginning of Bitcoin, if you would have held Bitcoin for at least 1 year, then you would be in profit. In this figure, you can see that here you can see the compound annual returns, okay, for different periods. And if you would have held Bitcoin for 1 year, as we can see on the right over here, you would have a return of 22%. If you would have held Bitcoin for 2 years, 29%. 3 years, that would be 35%. 4 years, 113%. And 5 years, 119%. Okay, so that's reason number 1. The price has already gone up a lot in the past. Reason number 2 is that ARK Invest thinks that the price of Bitcoin will likely still go up a lot. Okay, they think that Bitcoin will have a market cap of about $3 trillion in 2025, which is about 14 times more than the current market cap. And that would mean that Bitcoin would be worth about $140,000 in about 5 years, because it's right now about $10,000. But why does ARK Invest think that the price of Bitcoin could still go up? Well, they mention multiple reasons. I'm not going to go through all of them, but one of the reasons that they do mention, and one of the reasons that I find very interesting, is that Bitcoin could become digital gold. Gold has been the most sustainable form of money for thousands of years. If there is a crisis like the Corona crisis, for example, then many people usually sell stocks and buy gold because they think that it's safer and it keeps its value. That's what we call a store of value. And ARK believes that Bitcoin could take over this role of store of value of gold. And if Bitcoin does that, if Bitcoin could take up only 10% of the share of the physical gold market, that could mean that the price of Bitcoin could increase about 5 times, according to ARK Invest. So that's reason number 2. The price of Bitcoin will likely still go up a lot. Then reason number 3. People could use Bitcoin to have a stable portfolio. One of the reasons ARK gives for this is that they say that Bitcoin is not very correlated to traditional assets and stocks. That means that they don't usually move in the same direction at the same time, okay? So if stocks go up, that means that Bitcoin could go down at the same time. If you, for example, had the same amount of money in Bitcoin and in the stock market, and the stock market went down like 30%, for example, while Bitcoin went up 30%, well, then you wouldn't win nor lose money. And people prefer to stay break even and not lose 30% of their money, of course. Now, to be honest, this did surprise me a little bit because I actually thought that Bitcoin was very correlated with the stock market. So let's just take a look at the data. Here in figure number 9, they show comparisons with the S&P 500, with gold, oil, bonds, emerging currencies, real estate, and then we have 3 stocks down below, which are Bank of America, Apple, and Tesla. So let's take a quick look at the graphs. Each graph over here corresponds to one of the assets that I just mentioned. And as we can see from each graph, it usually hovers around the 0 mark, okay? As we can see, for example, over here, it usually is around this 0 line, this horizontal 0 line. So that would mean that the assets and Bitcoin are indeed not correlated. We do see a spike, a pretty recent spike over here. So, well, I don't know, maybe that's why I thought that Bitcoin was actually very correlated. And we pretty much see the same results in all these 9 graphs. It usually hovers around a 0, around a 0, around a 0. And then we have a massive spike in 2020 up to about 40–50%, which is still not very correlated at all. So that's reason number 3. Bitcoin could be used to create a more stable portfolio. Then reason number 4, Bitcoin is an asset that is being traded more and more. Here we've got figure number 17. And here we can see the trading volume of Bitcoin versus some of the biggest stocks out there. In this case, we see Amazon, Google, Facebook, and Netflix. And it might be a little bit difficult to see, but Bitcoin is this blue line over here, okay? Now we've got the yellow line, which is Netflix. Then we have the red line, which is Google. And both of these lines, the yellow and the red line, so Google and Netflix, are both below the line of Bitcoin, which means that the trading volume of these 2 stocks is actually lower than the one of Bitcoin. But the trading volume is not as high, or the trading volume of Bitcoin in this case, is not as high as the trading volume of Amazon, which is this blue-greenish line, and Facebook, which is the gray line. But ARK does say that each year, the trading volume of Bitcoin has pretty much tripled. So if that continues to happen in the next years, well, then it probably will surpass the trading volume of Facebook and Amazon as well. Okay, so that was reason number 4. Bitcoin is traded more and more. And then the last reason, reason number 5, is that Bitcoin is a good asset in a well-diversified portfolio. I'm going to be honest here, this part is a little bit difficult, so I'll try to summarize it as follows. ARK has done some simulations with 1 million portfolios that are composed of various asset classes like real estate, stocks, gold, etc. And ARK is only talking about institutional investors here. So the big money managers, so to say, who have diversified portfolios with all of these asset classes that I've just mentioned. But hey, I suppose that individual investors like you and me can benefit from this information as well, right? So if I understand this correctly, according to ARK, if you're only looking at the price history of these assets, so of real estate, stocks, gold, Bitcoin, etc., then ARK believes that institutions should allocate between 2.5% and 6.5% of their portfolio to Bitcoin, depending on their goal. So that's only when you look at the price history, okay? But if you also take into account the possible future of Bitcoin, or in ARK's words, as we can see over here, the total addressable market, then institutions should allocate anywhere from 0.03% to 26% of their portfolio to Bitcoin. Well, that might not be very helpful. That is quite a massive range. But it does show us that investors could benefit a lot from having Bitcoin in their portfolio. Okay, so that's reason number 5. Bitcoin is good to have in a well-diversified portfolio. Okay, so those were the 5 reasons why ARK Invest believes that Bitcoin could be a good investment. But ARK also says that there are risks as well, of course, and they mention 3 of them. So let's first take a look at risk number 1. They call it custody. ARK pretty much says, well, yes, if you have your private Bitcoin, if you have your private keys, then Bitcoin is very safe because of its cryptography. But we should understand these security measures very well in order to keep our Bitcoin safe. Because if not, well, then people can steal it. We as individual investors can use ledgers for this, just like we said in a previous video. But that might be a little bit more difficult if you have $46 million in Bitcoin, just like ARK Invest. Then risk number 2 is regulation. ARK says that there aren't many regulations yet, but that could change in the future, which is why they also say that investors have an opportunity to take advantage of Bitcoin while it's still unregulated. So in ARK's words, we believe investors have an opportunity to capitalize on a vacuum created by this regulatory uncertainty. Like the internet, because the Bitcoin blockchain and the Bitcoin cryptocurrency are here to stay, governments are likely to discover ways to deploy them to their advantage. And then the last risk number 3, is over-institutionalization. If there are many institutions that are investing in Bitcoin, well then all those institutions would need third parties to keep their Bitcoin safe. Okay, that's what ARK says. And that is a little bit annoying because, as we saw in my first video, Bitcoin was actually meant to eliminate the need for third parties. So that would pretty much limit the reason of Bitcoin's existence as well. So there you have it. 5 reasons why ARK Invest believes that Bitcoin is a good investment. The price has gone up a lot. The price will still likely go up a lot in the future. It's good for a stable portfolio, it's being traded more and more, and it's also good to have some Bitcoin in a well-diversified portfolio. So this video might have been a little bit difficult to understand, but I do think it's very interesting to see why the big money managers are so invested in Bitcoin. And honestly, it also gives me a bit of confidence to stay invested in Bitcoin myself as well. If you've made it to the end of this video, then I would love to hear your opinion too. Which of the 5 reasons that we have mentioned in this video do you think is the most important to invest in Bitcoin as an individual investor? Drop your answer in the comments below, I'll make sure to answer. And then in the next video, we're going to see how you as an individual investor can buy Bitcoin too. So I hope to see you there. See ya!